All right, so today we're going to get into two contracts with gold futures. And I'm going to do this because I've had enough profit build up, and I'm going to start going up in contracts. I do have a little bit of risk, more risk tolerance, so that's why I'm doing that. I've been doing one and then just trading over and over again. I've done 5, but then I was like, okay, let me show you guys exactly how I would leverage up once the account gets built up, or you do have enough capital to be able to take bigger positions and take a little bit bigger losses. And so I'm going to do 2 to 5 today just to show you that strategy, and then how I'm going to the mindset going into trading, the timing of positions in and out, when to short, when to go long, and just provide you guys with some insights on how a day trader actually trades gold futures. And again, in this case, gold futures are $10 a tick or a penny. That's how futures work. They're leveraged, so you do get a little bit more bang for your buck. So anyways, getting into that, let's take a look at the chart here. I'm at the 1 minute. The 1 hourly looks like it is going up, but remember the other day, the 4 hourly looked like it was going to go up and then it just sank. So we want to kind of be cautious. It is 8:49. Against my rules today, I did say I don't trade at 9:30. I'm not trading at 9:30. I'm trading at 8:50. So anyways, pre-market, a little bit more tougher, but you still can trade about the same way that you would. Just be cautious with big wicks. They can definitely stop you out if you are providing yourself with stop losses. So anyways, right now I'm just looking at the 1 minute and the 3 minute to see where we're at. My other chart, there is some strong resistance here. Right along this line, you can see back here was some the wick. So if you match that, we do have some resistance at this price point. So we are going to probably play a short. So let me go ahead and take a short right now. Pull that take profit down to about right there to 180 bucks. See if we can grab it. We do have wicks, so we want to be cautious. Go back down to the 30-second. All right, so we're going to drop down to, once this gets broken, once this breaks this plane, hopefully it breaks the trend, we go ahead and do fall down. So I'm going to go ahead and pull that right about there to match to that cloud support right there, because I think we'll go through the support and hit resistance here, hopefully. RSI's on the way down. Your MACD is dropping, going to yellow. That kind of concerns me, but not too much. We are in a 30-second, so we do have room for error. And remember, if you're good in the 1 minute and the 5 minute and you're looking at the 30-second and it's starting to go up, remember overall, you still have time to work in your favor. As you can see, we almost did touch my take profit level. So there, people are thinking the same as me out there. That's how usually when you see the same, take profit levels. Most of these traders know what they're doing, hedge funds, etc. I should have probably took it when I had it, when it started going back up on this, because now it's going to go against me. 3 minute is, we're still looking like, could be a nice retracement. I do not like that. So I got to think if I'm going to get out of this position, right up to resistance real quick, or wait for it and hopefully it breaks back down. I think it's going to go ahead and break back down. Overall, we're still in that downward trend right here. If we take a line, draw from here to here, can't draw from here to here. You can see that we're still on a, imagine that imaginary line right there. If we're here down, we're still in that downward trend for the 30-second. That's exactly what we're doing. We're going back down. We had a retracement up. You always have 30 to 40% retracements, and then they drop back down. Anything over 68 some percent, Fibonacci 68.5 or something, 68.75, I don't know what the exact number is. That's usually an indication of a reversal. So we want to be cautious about that, which it looks like this thing may just go back up here and hit the, we're getting into that cloud. Whether or not we bust this cloud and take off, that's going to be a long bull after that. So we got to be cautious on this short. That's why I said shorting, there's unlimited potential of losses, because everything can go up to infinity, but if you go down, you can only go to zero. So that's why most people buy stuff, because when you buy something, the most you can lose is what you bought it for. When you short something, you have an infinite risk there up to the upside. Chances are the market won't go to 4,000 a day, but just saying, if it did, there is that situation there that could break your account or blow your account. So just be cautious on shorting stuff. All right, I don't think we're going to get too much short out of this. I'm going to just got, maybe not. Maybe it's coming back down. It's kind of looping back down. So once you get the feel of how candles and stocks and basically assets move, you'll kind of get an understanding of support and resistance zones, median values, median range, standard deviation of where prices should fall back down to, looking at the order books, seeing volume and how many orders have been placed, how much they climb or go back down. You can kind of trade off that too. Yeah, I'm just looking for a drop here. If this breaks up, then going into 930, we may have a market climb. So I just have to be cautious on this. Trying to get this 220 real quick. We're only down 200 now. Yeah, the wicks are even trailing down. They're not higher highs. They're lower highs. So that's good. Kind of getting that rounded top there. Hopefully it starts breaking down just enough to pick up my 220, get out of this position, and then move on to the next. Some days 220 comes in within seconds, sometimes, or 100, 180, 220, 400, and then sometimes you got to work for it, just how the market is. Go to the 30 second. If you guys do not have premium or TradingView Premium, you will not get anything less than a minute time frame. Just be cautious, or just take note of that. There'll be times that I'm trading and I'll go to 30 second, 15 second, and you guys ask me, well, why don't I get that? Well, it's because you don't have TradingView Premium. It's $59.95, $59.99, whatever. And then also futures data. $7. You got to pay for futures data to get the live pricing. All right, let's break. Let's go to up here. See if we can hit. Let's see if we can at least get 60 bucks. It's been a long trade for only 60 bucks, but it is what it is. I'd rather take 60 than lose 60. I know I can get it. Come on. That right there told me, come on, you can do it. All right, there's 60 bucks. Now, let's go back to the 3 minute and see where we're at. Okay, we could fall back down to this range, the 2560. So I'm going to bump this up, like I said, to 5 contracts. Take profit is going to be right there. That'll give me 650. The more contracts, the more reward, but also a bigger risk if it goes the opposite direction. I'm going to pull this up to about right here and try to get 300. Get that price action working in my favor. I actually see a downtrend right here, and then what's going to happen is if it can't break to this point, we're probably going to come back down to here. So I'm just going to say we may be short for the day again. What do I think gold will drop to 25.30, 25 25, I don't know. That's way down here. With the 4 hourly candle, highly unlikely. That's down here. We probably will test 25.87, 25.80 before we do 25.25. Just keep that in mind. If you guys are trading with me or trading futures, you know, as you can see, when it goes against you, it goes against you bigger because you have more contracts. So, all right, so we see that there's multiple wicks in this zone right here. So I'm going to try to at least scalp some of that. We got to break these wicks just to be able to get that profit that I was originally trying to target. So we're not going to do that. We're going to try to pick up some of this liquidity here within these wicks. So you go probably about halfway in between them. I don't want to see the lagging span line break through here because we're going to have that short-term bull run right here, and I don't like that. That's going to put me in a hole. I want to always see green, but the red happens. It's the cost of business. Go to 15 seconds. Let's see what this thing looks like. All right, we're getting red, so we can actually probably drop that down about right there. I'm expecting this thing to fall down this way. Hopefully it doesn't do that. Trying to capture that little bit of green area right here previously, which is over this area. These are all just liquidity zones. When I say it's trying to capture these areas, the Ichimoku cloud gives me a support right here, green. So that means if you're looking back, I don't know, I can't remember what I have my settings for, but if it's basically taking into consideration looking back so many time frames or candles back, and it's comparing what it should do, or history repeats itself, it should come up, and as it did, and then now we're getting red because you have selling periods right here. So it's saying, hey, look, what happened in history, we had selling, so it's probably going to do that. And then if you break the pattern, that's where you see reversals. So that's why I did not want to see this shoot up through here, because then you're going to break this zone and you're breaking what happened here, and it's doing the opposite now. So when you break resistance, then that's a trend reversal, just like I've seen. So I am down 800 right now. I want to see that come back down. And then right here is showing me future buying is happening, which is going to be, once we get over here, this is what's happened here. So that's why it's going to go up and up and up if it's a longer time frame. Now we're trading 15 seconds, so might not happen. Hoping this thing breaks down. There we go. Now there's some selling. Yeah, again, the Ichimoku cloud is taking a future projection based off kind of what's happening now. So if you can break that, then it's going to go up and up and up. If you get the resistance and you fall back down, then obviously this does not matter. You basically came back down to these price points. So that's why I'm saying history repeats itself. Understanding value or median ranges, zones, liquidity zones, buys, support and resistance zones. They all matter when you're trading, because, and trends. When you understand that this was on a downtrend and we broke it, you draw the line, draw the channel, come across, and then you broke it for momentarily, and then you came back down. Or looking at a longer period, draw it from here. That's really, can't really do that. You can draw that, and the line may find the candles may bounce off that line if you drew it from here over. But typically you're going to draw it from here to here, and then you broke here and it came back down. All right, so I may have to get out of this trade, just take the $900 loss. We're getting into our cloud, and if it breaks that, then I'm really going to be in the hole, and I got to watch that. So in a 15 minute, same thing. 1 hourly is definitely the same thing. So it's breaking probably to here, 25.84. So let me just go ahead and try to break even, or pick up 150 bucks. Before I close this trade. Always hate to take losses. I mean, anybody does not want to take a loss, but sometimes you just have to. All right, there's going to be my 150 bucks. All right, so let's wait to see if this thing settles below the cloud or bounces off here. If it bounces off the support, then I'll go long. Which I should have probably right there on that. Let's see, 1 minute. 1 minute switching. All right, so we could have got our 600. So we're bouncing off right here. If we break this line right here, I may just go short again. See, it's bouncing right off of there. There's one. It's trying. It most definitely is trying. Come on. Hate to go long and try to pick up. All right. All right, we're going to take... Oh, no. See what happened? You got to watch that. I'm just going to try to pick up... Ooh. I should have shorted, didn't I? I mean, it shouldn't have. All right, so it did break. Like I said, it did break. That would have been a good 900 bucks right there. Hindsight. All right, so let's just go back, see where we're at. All right, we are coming back down. We still got support. This thing trying to break through our trend right here. So I think we'll see 25. Let me just pull this up. There's 19. There's 1200. We're right at that wick. So let's try to capture that. Let's see what happens. It's going into about a half hour of trading. And being down 1,000. We made what? I can't remember now, 150 something else, and now we're down. So we lost our profit so far, but we'll make it back up. We'll close out 1,300, 1,400 bucks if I get that 1,250 within a half hour. So that wouldn't be a bad day at all. One thing I do want to talk about is trading with your own capital, using prop firms, whichever path you decide. I am an affiliate with a couple prop firms. If you want to check those out, the links are on my website, the Warrior Wealth Solutions. Blue Sky Apex. The thing that I want to talk about is if you're a beginner trader and you don't have the capital, it is a good tool. They are good tools to use if you do not have the capital to start trading. Are they risky? Yes, just like anything else. The biggest issue with prop firms is the daily and total drawdown, meaning they allow you only so much to lose within a day or the whole account. Blue Sky, I think, has $25,000 accounts, $50,000, $100,000, and $200,000, and each one of those come with different drawdowns. Drawdown means basically total loss. So, like for $25,000, you can trade one contract and be okay for the most part, unless it totally goes against you. Once you get up into 4 contracts, one candle that you're trading long and this candle went up, or say you're trading long, this candle shorted and came back, or the candle, the wick came down, blew out your account, and then went back up. That's the issue, because the daily drawdown is made, I want to say it's made to provide you with a set of rules. However, it's also there to blow out your account. I'll admit that, because if you was short or long here and it came down and then now it's back up, you're in a winning trade, just like you've seen. I most of the time, I'm telling you, most of the time, as long as you understand ranges, you will make profit if you're trading with your own capital. If you are against, or if you're using prop firms and stuff like this comes down and then goes back up, you blow out your account. If you're going long right here, right, you know you're in an upward trend. If you go long here and then it's this literally a candle that dropped 3 points 4 contracts would have definitely blew you out on a $25,000 account. So if you have a $100,000 account and you only use 1 contract, no, that won't blow you out. But guess what? You'll be trading forever to make their profit targets that they require you to get, because in order to start trading with real cash and making real money, you have to pass basically 2 evaluations. The first one is the paper evaluation, where there's no money involved. It's literally, you just have to pass up to $1,500 for $25,000 account. $100,000 account is like $6,000. So if you're making $50 a day, it's going to take you forever to make $6,000. And then your risk to be able to handle such wicks like this, you're only going to have to trade 1 or 2 contracts, and you'll get there, but it's going to take months. So you're not paying for a new evaluation if you haven't. No, yes, you are paying for a new evaluation every single month until you get to that next evaluation, which is the real account, but you still have a profit target to hit, which is usually the same before the last, another $1,500 or another $6,000. So it's going to take you another 4 to 5 months to get to that. So you've paid a whole year before you've made any money. If you're a good trader and you can withstand such little trades day by day, then yes, it could be worth it. If you're lucky and you put up 4 contracts and make 600 every single day, you can eventually make money with prop firms. But these candles right here that get you, which you don't know when they're coming, I don't care what people say. I'm trading, literally 30 seconds to 5 minutes. These can wipe you out at any moment of the day if you're taking that many contracts. So back to using prop firms. Yes, it is a valuable tool to learn how to trade, cheaper than it is to put up your own capital and lose it. So I'm telling my students, I'm telling anybody, start trading. I'm not going to tell you what to trade, but I personally, let me go back to that. I personally have traded SPY, QQQ, maybe Apple, Google, Microsoft, stocks that I see that have been in the industry for years, decades, that are solid companies. Trade those, get used to trading, and then go over to futures with your own capital. Prop firms, I'm probably steering away from prop firms for now, just because steering away from teaching you guys to get into prop firms, because any moment these candles can blow you out, and it's going to make you mad. So anyways, back to the trading. You can see that I did pick up the profit, and I'm probably going to call it a day. I'm going to wait for 9. Actually, I'm going to make a little bit more trades with you guys just to show that it can be done. And just again, the thinking of how I go into this. So we have such a huge range here and here. This is the 5 minute. So I'm going to probably play along just to see. Yeah. So looking at the range within this whole area, we know that there's supply and demand here. So I'm going to just go ahead and go up, set the take profit to about right there, which will give me another 550. And then I'll be done. That will almost put me up to 2,000 for the day. So close. Come on. It's fighting. Come on. There's orders there. You know there is. Come on. It gave it to me. I just didn't get filled yet. Come on. There we go. All right. We're filled. There we go, fellas. All right, anyone watching this, make sure you comment any questions that you have about trading. Check my website out, warriorwealthsolutions.com. I do have a mentorship program going on right now where I will literally get with you one-on-one every single day, teach you how to trade, teach you everything there is to know about trading, to try to speed you up for the last 10, 12, actually 15 years worth of trading that I've done, and to speed you pass through all that to get you trading today. So anyways, again, warriorwealthsolutions.com. Make sure you like, comment, subscribe, and ask me any questions that you may have. And I'll see you next time.